Dorcas from Meru, thank you so much. John from Dagoretti, thank you. Josephine from Kenya. Josephine, where are you joining us from? From Kenya. Martha Kitengela, thank you so much. Your expectations as well, please. Lillian from Kiambu, thank you, Lillian. Thank you, Francis, for joining this webinar. Evelyn from Roysambu, thank you so much. We value your membership as a Kona Sacco, and that is why on a monthly basis, we come up with the training sessions to just take you through some of our products or processes, and even, something that we feel, a topic that we feel that is important to you. Benjamin Kianzokoma, thank you so much. Washira from Doha, thank you. Thank you for joining, Washira. Thank you so much for joining. Keep typing your expectations. I've not seen that. Your expectations from this training. It will be very important. It will also guide the trainer in terms of, Q&A or areas that you would like him to touch on. Kimani from Kiambu. Thank you, Washira Doha. Phoebe Wambugu from Dubai. Thank you so much for joining, Phoebe. We also encourage you to be very, active. We will use the Q&A to ask questions. We like interactive sessions. Thank you. Thank you so much. Your expectations, I've not seen that. So the agenda of this meeting, it's about, we will go through the webinar, the training itself. We have a special guest, as I've mentioned. And then after that, we will handle your questions. That is the Q&A section. And then lastly, we have a quiz today. It's going to be, as I've mentioned, it's going to be very interactive. We have a quiz at the end of the webinar, and we have something exciting from Kona Sacco to share with our members. So make sure that, you listen to our speaker keenly so that you can win something at the end of the session. So please make sure that it's going to be very interactive. Dorcas is saying that my expectation, how to manage my finances, no matter how big, small, how to identify which areas to invest, which can give good returns. Dorcas, that will be taken care of today. James from Buruburu to learn about Sacco offerings. We will tackle that. Salome, apologies for that. We'll take care of that. I hope the sound is good. Salome is telling me that there's an echo from the background. It's now sorted. It's not sorted. Someone has written that it's okay. Apologies for that, Salome. So thank you so much. As I mentioned, we have members and non-members in this training, in this webinar. So it's a very special training, as I've mentioned, and we have a very experienced speaker who's going to take us through this session. And at this point, allow me to introduce the speaker of the day. His name is Eliud Nzola from Coop Consultancy. Allow me to introduce him.
nyumbani kwanza. Ona nyumbani kwanza. Ninataka kuzenza. Ninataka kubawa. Kona nini zito. Kona ninafu. Kona nichungulia. Kona nyumbani kwanza. Nyumbani kwanza. Ninataka kuzenza. Ninataka kubawa. Kona nini zito. Kona
Thank you so much. Thank you so much. So as I mentioned, we have a very special speaker today. Without further ado, allow me to invite our speaker of the day, Mr. Eliud Zola from COP Consultancy. Eliud, welcome.
Thank you, Ruth. I'm happy to be here today for this webinar, and thank you, Ruth, for the introduction. I will be taking you through a very exciting area today, and maybe something Ruth has not mentioned is that I work for COP Consultancy, and COP Consultancy is a training and advisory arm of of Cooperative Bank. And what we do is to support cooperatives in Kenya and even those diaspora SACCOs so that they can grow together with their members and also the staff. So those are some of the things we do day to day. There is nothing else that we do. We support cooperatives, and I'm happy to be here. Today, what is the agenda? The agenda today is just to understand what a cooperative is, because I have found this to be a very interesting area because many members join a SACCO and only think of how can I get a loan and when can I get a dividend. That's it. But there is more to it. Then secondly, we'll also understand the SACCO business now. What is this SACCO? We keep on talking a SACCO. What SACCO is it? How does it operate? Then I will mention this is something very personal especially for everyone who is planning to retire and stay long, depending on how God wants you to live in this world, planning for your life stages. I know many will think of there is birth, there is marriage, then the last there is death. No, there are other life stages that we undergo, especially on financial matters. Then distinguishing between good debt and bad debt. I know someone may get into a debt without knowing, but how do you come also out of it? And how do you also make a decision to borrow? Then understanding some investment at different life stages. How do you invest at different life stages? Because as you age, you need to consider at what stage in your life are you at? And what am I supposed to be investing it? Because some people end up making mistakes investing in assets which may not really, when they are at old age, which may not support them at that old age. So let me go to the first area, which is the cooperative identity. What is a cooperative? Because many of us think of a cooperative as just as a business. And when you go back to the history of cooperatives, when they were started, cooperatives are very different from a company. because I know most of us are maybe from a corporate world. You are working somewhere, or you're even running your own company or your own business. But a cooperative is a bit different from those businesses because it's owned by people. And as you will see, it's very different from the normal business and farms or business enterprises that we see. So a cooperative is an autonomous association of persons united voluntarily to meet their common economic, social, cultural needs, aspirations through jointly owned and democratically controlled enterprise. That definition is very wordy. And you can see there are key words which I have highlighted. Autonomous. Actually, cooperatives are supposed to be very autonomous in their operations because it's voluntary. People unite voluntarily. They come together. Nobody forces them to meet their common. There has to be a common need. It's either economic, a social, or a cultural need for you to come together. And again, a cooperative must be jointly owned. Nobody in the world can own a cooperative alone. Just the way you register a company, you cannot own a cooperative. A cooperative is owned jointly. And in Kenya, you must be at least 10 people to have a cooperative, to own to be part of a cooperative, and you own it together. So I usually say, you cannot say this sack of mine. You can only say this sack of ours because it's not yours alone. Then democratically controlled. The way the cooperatives are run is through democracy. And this starts with even the way we elect our members, our directors, our supervisory committee, and even the way we make decisions. For example, when you go to AGMs, there are resolutions which are passed and they are voted for. That is democracy. And that's how things in a cooperative are done. So that is key. The major definition worldwide, where you can get it. Then the other part is cooperatives run on principles. We have 7 principles that cooperative use. And that is what defines the identity of a cooperative. And the first one is voluntary and open membership. In other words, nobody forces you to join a cooperative. And you can also decide to leave. That is how it is. The membership is open for you. But we usually put, so long as it's within the common bond, because there is no cooperative without a common bond. It has to have one bond or another. For example, Sacco may say anybody who is a resident, for example, in Kenya. That's a common bond, or is a Kenyan. Others, like my Sacco in Cobank, Sacco, it says you must be a staff of Cooperative Bank or Cooperative Bank Group, including its subsidiaries. So there has to be a common bond somewhere. And what you shall do, we expand it with time. We can get another company to have membership come in, and it is free for you to join, so long it is within the common bond. The other one is number 2, democratic member control. Yes, members participate in electing their directors, their leaders, and also in terms of making decisions. That's when you are passing resolutions during AGMs. The other thing is 3, member economic participation. And that's very important because if it's us, there are many types of cooperatives in Kenya. And there are 7 of them which you can register in Kenya. Sorry. And some of these cooperatives, one is a Sacco. And I want to dwell there a bit because we tend to call every type of cooperative in Kenya a Sacco. We hear somebody talking of Safaricom, a SIC investment Sacco. Actually, we don't have such SACCOs. We don't have such a Sacco in Kenya. SIC is an investment. When you talk of, for example, Stima investment, that is an investment cooperative. It is not a Sacco. So you cannot call Stima investment Sacco. We find that confusion a lot. And the 7 types of cooperatives we can register in Kenya, one is a Sacco. That is a savings and credit. You can register a housing cooperative. You can register a transport cooperative. You can register a savings and investment cooperative. You can register a consumer cooperative. You can register, there are two more, a worker cooperative. And the last one is a marketing cooperative, or what you call producer cooperatives. Those are the marketing cooperatives, are the ones you call the farmers cooperatives. So they are not SACCOs. So a SACCO is just one type of a cooperative. And the economic activity of our SACCO deals with money, savings and credit. Therefore, if you are a member, you need to know, you need to save and get a credit from it, because that's the economic activity of that SACCO. The other part, number 4, is autonomy and independence. Yes, every SACCO operates, every cooperative operates independently. You make your decision, but of course within the law. Actually, when you go back to history, cooperatives used to just to operate on their own and make their own decisions. But because of some corruption, some mismanagement, misappropriation of funds, the law came in. And that's how now we say, yes, you are autonomous, but make sure you are within the law. Then education, training, and information, what we are doing today, very important. We are doing it because every cooperative actually registered in Kenya, if you go to their bylaws, you will find they must have an education committee of the board, which conducts member education. Rarely will you find it in any other form of business. If you go to a company, they don't run such a thing because that's cost. Because purely companies are formed to make money. The other thing is cooperation among cooperatives. Cooperatives work together. And one way they work together is they can come for a cause. For instance, Cooperative Bank today would not be there if it was not the cooperation among the farmers cooperatives. These farmers cooperatives in 1968 came together and raised share capital and said they want their own bank. And that is how Cooperative Bank was registered. Even CIC insurance, it is the same way. Cooperatives came together, raised the share capital, and said we need our own insurer. And that's how CIC was born. Then lastly, we have concern for community. Everywhere where we operate, we need to be concerned about the community. We don't pollute the environment, we protect the environment where we run our business, and everything that we do, it's within the law, and we take care of the environment and everything that is in it. Therefore, those are the 7 principles internationally recognized. And don't make a mistake of confusing them with any other, because they are well documented. There is an international organization which documents the cooperative identity and the philosophy, and that is the ICA. If you go to the website ica.co.coop, then you'll be able to get everything there, because cooperatives are also well organized. Also, cooperatives operate under key values, and these cooperatives are based on values of self-help, self-responsibility, democracy, equality, equity, and solidarity. And of course, we believe in ethical values of honesty, openness, social responsibility, and the concern for others. Those are very key also for us. If you go to any bylaw of any cooperative registered in Kenya, you'll find those principles and values are there. After the objects in the bylaws, they are listed there, because a cooperative must believe in those values and the principles to be registered in Kenya. Now, let's dive a bit. So what is a SACCO? And a SACCO, just to make it clear, is a savings, and it stands for saving and credit cooperative. It's a member-owned financial cooperative. Its primary purpose is what? Is to pool member savings and provide affordable credit and other financial services. Now, there is something here very important. It's a savings and credit, meaning a SACCO cannot go ahead and do other businesses out there. For example, they cannot start selling cars. They cannot start selling land. Because if you want to sell land, then register an investment cooperative or a housing cooperative. You buy and sell land, but it is purely savings and credit cooperative. I know this, I have to explain it clearly so that you don't also force the, because actually I'm also a I've been a director for 8 years of my housing cooperative and also currently a supervisory committee member. And I've seen these where members push for investments. For example, members have taken loans and they ask, so what else can we do? Can the directors look for something else for us to do? I've borrowed, I don't want to borrow, I want land. I want to invest a lot in something else. What are they doing? Because the return is very low. The primary purpose, remember, was to pull members together, and then they put that money together so that whoever has a need can borrow from that money. And put this scenario, if the cooperative was an investment or very key investment, what will happen? A cooperative can charge huge interest and pay you a very good dividend. But what will we be doing? We will remember the members are the owners and they are the customers. You are the one who has put money there, and you are also the same person who will come to borrow. For example, you get a loan 3 times or 4 times of your savings. So you only borrow part of your money plus other members' funds. So that makes it very different from a bank. And again, we have to distinguish a Sacco does not operate like a bank, because a bank mobilizes funds from the public. It's licensed to do so. Actually, you'll find banks don't have their own money. And what banks do, once they generate money, they retain part of it. They don't pay all that money. It becomes part of their core capital so that they can be able to lend more. Sacco does the same. However, now it does only through from their members. You are the owner. Therefore, you contribute the money there. And therefore, you are the one, you borrow the money from the same Sacco and you repay. So it's, again, in that scenario, you'll find if a Sacco is comes up and charges very high interest rate, what happens? The Sacco will be lying to you in one way or another. How? Because they'll be getting money from you. At the end of the year, they tell you there's dividend here, but it's still your money because it's you borrowed as a member and you repaid. Therefore, you'll be refunded your own money. Therefore, what do we do? You'll find now the challenge we have in Saccos is a big one. The challenge is the people who come to a Sacco and only keep money there and just save, right? And then you don't borrow. You just want a return on that money. Now, those who have need will borrow. But you, because you are expecting a return, now you'll wait to be paid a return based on that fund. Now, the Sacco has to balance between, there are those who have saved, they want a return, they have not taken a loan. There are those who have also want to borrow, who will be saying, how come now you are lending so expensively at very high interest rates? Even sometimes you may exit the bank, and that now creates another friction again. Therefore, you'll find directors have to balance between what the members who have saved need a return, and those who are taking loans, they are also able to get some in good rate. Now, but remember, if you are a member and you have joined the Sacco and you have not borrowed, actually you are doing a disservice to your Sacco, because you need to borrow so that you can borrow and go and invest. And I usually look at a Sacco like it's a springboard, because you are allowed to accumulate your money there for a long period of time. After you accumulate, you are able to now say, okay, I want to build my home. Can I get a loan? All right. And then I can build my home, or I want to invest in a business. I can now get 3, 4, 5 times my savings there and do my business. So that's one way how a Sacco supports a member. And again, each member has equal voting rights. One member, one vote. It doesn't matter how much you have saved in a Sacco, because you may feel you have sometimes feel you have more power. I have put my 5 million here. I need I need to have a say. Not really, because all members in a Sacco are equal. And therefore, whoever has saved 100,000, 50,000, another one, 1,000,000, you are all the same. And every member has one vote. And the primary goal of a Sacco is not profit maximization, but a welfare one, member welfare. It's more of, you need a loan? Yes, you can get it very easy. And somebody may ask, by the way, Eliud is a member of a co-bank Sacco, yet I work for a bank where the money is. How come? And even a member of my housing cooperative. They are totally different. And there is a reason why you need to join a Sacco and become a member of a Sacco. The reason is, you are even in these parts. Let me ask you something, you will be shocked. You'll find you trust more of the banks than even your Saccos, and you don't know even the people who run those banks. You don't know. If I ask you, even some don't know even the branch managers. You don't know even who is the branch manager of a certain bank. You don't know even who is the MD. You even sometimes see them on TV. That's it. But here you elect your directors, the people you want to run your organization, and you even participate in the decision making, right? Let me shock you something. And I usually say this when I'm training members because I find it a bit very very funny. You'll find banks are very good in making money. They make a lot of money and they come and now declare dividends. But how many here, even in this training, are members or are shareholders of a bank? Because they will declare billions. And yet you are running there and putting all your money there. And yet they'll come and declare dividends. But when the moment they announce it, that's it. Unjuangi inaendea kugawiwa wapi? They go and the shareholders get their share, and that's it. They will announce next year. They're very good in announcing, but will not participate. So that is where you need to be a member of a Sacco, because that's where you make most of your decisions and you can control how your money is being utilized in the Sacco. So in short, in a Sacco, we put resources together, we provide loans to the members pay back. If there is something at the end, we pay the returns. But there is something here you need to be very careful. By the way, Saccos don't make profit. And I want to be very clear there. Saccos don't make profit. What they do, they usually have what you call surplus. And that is what happens, because a profit would occur where you have sold something to somebody and gives you bought it at a cheaper rate, you lent at a higher rate, and then you get a return. But here it is you who has put the money, you borrow. At the end of it, people have borrowed, and we only come back to share what has remained at the end of the year. So it's actually called surplus or deficit at the end of the year. Whether actually you will find the books of the cooperatives, it's about surplus or deficit. Therefore, we don't make profit, and therefore we share. And then it comes to the AGM, and the AGM decides, what do we do? Do we share, or do we pull it back to the Sacco or to the cooperative to utilize it for other investments? Okay, so that is very important to know. Then, what are the key drivers? Why do we need then to be a part of a Sacco? One, it's affordable loans. Actually, what you should be pushing for is how affordable are our loans. Because if you get it at a very good lower interest, then you are able to go and invest elsewhere, maybe in a land, which you buy land, you build your rentals and so forth. But you don't expect the Sacco to go and now to do that, because it's also limited by the regulator. By the way, a Sacco can only invest 5% of the total assets in land and buildings, and more so for their own office, not anything else, not for business. Because the key business is savings and credit. Remember, it is not a savings cooperative. It's not a credit cooperative. It is savings and credit. You save, and you are also able to get some money at the end of it if you need for your own support. Then encourages discipline again, because every month, that amount you put there is not easily accessible. You can't go and withdraw from an ATM, except the one that you put in the FOSA, the front office, the banking wing. But the one in the back office where you save and it accumulates, it's your saving, which you can utilize later. Surplus redistribution. Yes, when you have surplus, we come and pay in terms of dividends or interest at the end of the year. Then access to credit. Very easy. Here, you go to banks. For those who are in business, they will tell you, if you don't have collateral, it's not easy to get a bank loan. For those who are employed, it is easy because they use a payslip, yes, and you have a check off, okay, they sign an MOU and you are likely to get. But those who are in business know the importance of being in a Sacco, because this money you put there, they will not ask you collateral. Mostly they will tell you, can you get a guarantor? And you get the loan. So that is how easy it is. But in a bank, the conditions become tougher. Now, I just wanted to put this question. Is putting money in a Sacco a savings or an investment? What's your take? Is it putting money? You can put it in the chat. Is it a savings or an investment? What is it for you? Look at it from all angles and think about it. Okay? Because sometimes people just put money you are taught safe. At the end of it, you can get credit, yes. But I know those others who are thinking, no, I can invest here. Yes. And when you think of it, actually it's both. Because one, it's a saving. It allows you to save for future. Two, it allows you to save for an investment because it will not be just lying there doing nothing, because for those who borrow, they will pay some interest and it will accumulate something at the end of the year. Okay. But I know most of us, do we really even invest that money back? We take it very fast. But what have you done with the dividend? Sometimes we just misuse that money. So we have to be careful with the investment. So the better is to invest it there. You will see when we come to life stages what happens. Now, so as savings, it's money you set aside for short goal emergencies. For example, prioritizing safety and liquidity. Easy access. I can access this money in case, for example, I lose my employment. I can get my savings and start my life again. All right. Then, but investment is long term. Look at it that way. It's a very long term thing because you invest for many years. For example, you want to, for example, to start a business. It will take long time even to break even. You want to do rentals. It will take very long time to break even. Even those who invest in the securities exchange, you can't invest today and tomorrow you are making money in less than a year. You can't. It will take even many years. Some will tell you even they have done over 10 years. Personally, I've done it and I know how it feels. I started even after my end of university, and it takes even 10 years for this full cycle for example, on Nairobi Securities Exchange to give you a return. So that you can, the shares have now gained capital gains from the shares. So some of these you have to balance. Then in a Sacco, being a saving is very low. The risk is low to lose your money. But where the also investment, the risk is very high. You're likely to lose also the money. Many will tell you they have invested and their money gotten lost when they were expecting very high return. Then the return in saving is usually modest, very little, often fixed, kidogo too. Then, but in a return for investment, it will give you more out there. You invest, you'll find like in Nairobi Securities Exchange, you can even get 1,000 times of what you invested. I shall give an example, and it was being said left, right, center. Kenya Power was 1 shilling and something. What happened? It went all the way to 17 in less than a year. All right, those are some of the things. Liquidity again, savings provides you liquidity you can withdraw, especially if you have put the money in the FOSA and for example, there are investment products in the FOSA, the fixed deposits you can put there. The other side, liquidity is lower because you can't access that money, assuming you bought shares. And then at the end of it, you expect to get the money immediately. It will take time. because that time you want to sell, the shares may be trading at a very low price, right? So those are the key differences. The key distinction here is think of saving as a security, investment as a growth area for future. Then saving protect your money. Investment make your money work for you. Yes. So, for example, you save in a Sacco, you get enough funds, then later go out there and now get the money that you want to invest for long term. And you build a very strong investment with long term returns. Right. So let's shift gears out here a bit. Planning for life stages. Have you thought of this? And most times when I tackle this area, many people keep quiet. Don't worry. Now, these are the life stages I'm talking about. All right. Now, in life stages, you usually have the dependent stage. This is when you are born, right? And when you are born, up to around 20 years, you're actually dependent on your parents, your guardians supporting you. Then from there, you go to independent stage. Independent stage, you become like you have just gotten a job or you have started your small business here and there, you are getting your money, no dependence, you're doing your thing. From there, a spouse comes in. Growth stage, you're now growing. You have started business, you have started earning some money, and then your spouse is here. Then all of a sudden, children come. Between 30 and 50, again, maturity stage where now the children are grown, right? Then at retirement, that is when you reach about 60, 70 there. What happens? Your income goes down because you now start earning the pension, or you start earning from your investment, and which is not equal to your business or to your salary that you are earning. Now, let's see here. I drew this graph, this diagram some time back, and I noted something very important here. I was doing it for a teacher because I was invited to train at a teacher Sacco, and I just drew this graph, and I can share with you. Now, between 0 and maybe 20 years, what happens there? You are in school. Therefore, there are two things here you'll see. There is the commitments and there is the income. The green is the income. The red one is the commitments or the expenditures that you incur. Now, immediately after school, what happens? You get a job. Your income is more than your commitments. But all of a sudden, around 30s, 20 something to 30, all right? What happens? A spouse comes in, family comes in. And all of a sudden, your commitments increase more than your income, all right? Now, at that rate, you find your income is lower and you are not able to meet your monthly expenses. So how do you bridge the gap? You go and borrow. That's what happens. Now again, you move ahead. By the time you are 50, you are about to retire, your income, your children or your family, they are all now independent. Your income is now freed. You have more. All of a sudden, the income goes down. How does it go down? It goes to pension. It was 100,000. It has gone to about 10,000 a month. Now, how do you survive? Your commitments are still there. Remember, you have to eat, you have to wear clothes, and also do the other needs you need. And there is something that we forget. By the time you reach about 50, there is something that happens that you start aging. And that is where you start hearing people talk of what? Mgongo wangu, I need some. Then all of a sudden you start saying, oh, magoti yangu, blood pressure, all those things come. But your income is coming to pension. So where do we go wrong? When you look at where we go wrong, it's this age between 20 and 30 something there. When you are independent, the independent stage, when I go back, you can see the independent stage here. When you are earning the more money than your expenditure or than your commitments. So before your spouse or before any commitments comes in. So where do you invest that money? Most of us, we tend to do where? Kanywaji, twende safari, everywhere. Just utilize the money that you have to. And again, those are the people where you find you are the number one in terms of, I'm not saying it's bad, contributing to harambes, to weddings, and also wearing the best clothes in the market and so forth for the ladies, for the hair, every week or every 2 weeks, new hairstyle. Then you realize when you come to retirement how much you used. And also there is something else here which is happening, and maybe I mentioned this because I was told by one of a member in a Sacco. She told me that she's not educating their children was a key thing. She even used all the money she had, any money, took loans and took the children to even study in US, UK, everywhere. The children never came back home. She was left without money here. And now the children say, also, Mama, we have a lot of issues here. Rent is very high here and so forth. So what happens? The parent never invested for retirement, but invested in the children, and the children left. So there are some things you need to balance. Even when you are taking your children for education, consider how you will educate them well, however, taking care also of your old age. All right. So how do we also get into this mess? Because living within our incomes, yes, not to exceed our incomes, and again creating an emergency cash reserve. And how do you recreate it? Sacco is a very good avenue. Let me put some aside in the money in the Sacco, in my savings, because it's not easily accessible. But in case, for example, I lose my job, in case my business goes down, I can be able to get that money. All right. Again, clear or reduce your debts. As you age, clear your debts early. Don't wait until you retire with the debts. Again, make and stick to your budget. How many make budgets? Now, there is something here I also observe, because I've also colleagues I see when they are employed, they are young. The moment they start getting salary increments, what do? They shift houses. You are staying at 2 bedroom, say no, I need now a 3 bedroom. My salary has gone down up. So what has happened? Actually, the increment has gone to your landlord. It has not helped you. All right. Yet where you are staying, things were okay. How did you shift? And yet you had everything. You had internet, you had same bed, same space. But because you are now feeling I have gotten some money, I can shift. Or you even say now my car is old and it's only 2 years. I need a new car now. You get a new car again. So what has happened? The costs of maintaining that car has gone up. Yes. And again, is the car bringing anything? Maybe it is for taking you to work. And then you park it there. Sometimes even you don't have, the employer has not provided parking. Therefore, you pay parking for it. Kwanza inachomwa na jua every now and then. So, and everything now increases the costs instead of channeling that money into an investment or to a saving. Okay, then increase also your financial literacy, what you are doing today. Learn more about how to invest and also how to save. And again, if you are earning a salary or you are in business, always the first thing you do when you get the income or your profit, take aside some money, put in the Sacco, lock it there. That will assist you so that you don't easily access that money. But so long as it's with you, you'll use it. Then you'll realize you have used your money and it has not helped you. Then invest wisely. Therefore, rules, never underestimate the value of small saving. Just invest small. No matter how much you earn, put something first in a saving. Then always think twice before buying. Do I need it? Is it a need or a want? And I give you an example. For example, in Kenya, I know we like DSTV. Huh? We like Netflix. You have subscribed. And you're very busy in your business or at work. How often do you even use that DSTV? Some of us, we have used it for our house managers, are the ones who enjoy those things. We rarely, we only watch news, you sleep. Maybe football once in a weekend, that's it. And even it's not good when you're watching football week during the weekend, it's not very nice. You need to be somewhere where you are with your friends again. So you really use it. Then make track of your expenses as a habit. How much have I used? Have you done your recurrent budget on monthly basis? How much do I use? So that I know this is the only money I need. The rest can go somewhere to an investment. And I can tell you, if you don't, black tax will catch up with you. Avoid spending money on things to impress others. You want to impress others that so and so as art, even me, I have this. Don't ignore the budgeting. Always budget. Learn the art of negotiating. Anything you buy, negotiate. Don't just say you have money. Just get negotiate anything that you buy. Learn basics of investing wisely. Therefore, those are some of the tips I can give you for your investing and saving. What is bad? Good debt and bad debt. Very important. Good money, good debt is money borrowed. That helps you to build a long-term wealth. Increases your income or acquire an asset that's likely to grow in value. It is an investment in your future. In short, a good debt is when you get into a debt or you get a loan, where do you put it? Can it help you in the future? Or have you put it to a consumable? When you put it to a consumable thing, then it becomes a bad debt. A good debt increases in value over time. Is a car good debt or a bad debt? Think about it. Just a car. Like nowadays, you can see where the fuel is and what people are saying about. If actually the car is not generating money for you, actually it's a what? It's a bad debt. It's just eating to you what you are making. And I see especially the young people, the moment they get employed, immediately they want to rush and get a car. And again, that one will not help you to invest. Later, actually in the bank, we have seen it. It has been happening. And whereby young people come, they get the loans, immediately get a car. The next thing, they can't fuel it. What do? They just start stealing money from the bank. And that has affected so many people. All of a sudden, you lose your job. The next thing, you lose your car because it was on car loan. Again, all that. Then a good debt generates income for you because you have invested it somewhere. Then has significant future value. For example, even education. Investing for you, for example, to do a master's degree or doctorate, because maybe in future you want to do to become a lecturer or to become a professor somewhere, to also become a consultant. Those are some of the things you can invest in it. Bad debt, lifestyle consumption. That's where it comes in. Want the expensive phone, the best phone in the market, yet you only use 10% of it, the features of that phone or the things it has. Again, vacations, borrowing to go for a vacation, gambling, buying depreciating assets like a car. Some of the, because they don't, unless, I'm not saying buying a car is bad. If you are buying a car that will bring income to you, well and good, not just convenience yet. You can use other means and arrive at your workplace. Those are some of the things. But for convenience, now it's for you to decide. Now, how do you get into bad debt? One, we spend more than we earn. You earn this, but you spend more. And that is sometimes we create it. Again, we want to have what our neighbor has or a colleague. I've seen my colleague has this car. I need this. I have seen my colleague has this. I need also, especially ladies. I also see ladies who take photos of news anchors when they are presenting, and I need that. There they go. That's the kind of clothes they want. Again, loans are easily attainable. You can get it. I just said I get it. But how do you spend it? You find you squander the money. I usually give this, and the staff here who are Corner Sacco will tell you when they come to the when members come to the Sacco or they call, what question do they ask? And I know this, if you ask them, they will tell you. They will tell you, they ask, I wanted to confirm how much I can qualify for a loan. The next thing they do, they tell you, yes, you can qualify. I can see 5 million. Okay, then how do I get the loan form? And maybe what you wanted was only 500,000 to sort maybe something. All right. But you have now borrowed 5 million. Fantastic. You get the money. You use your 500,000 for what you wanted. Maybe you wanted to pay maybe for higher education. That's it. Where does the rest you go? Inapoteanga tu. Later, you will start saying, oh, I don't know even now. That loan never helped me. The man just disappeared. Therefore, those are some of the things, because it's easily attainable, be very careful. And actually, the best question when you go to a Sacco, just ask, I needed a loan of 500 to pay this or to do this. Then the staff should be able to tell you, yes, you qualify or you don't qualify. That is the easiest way than just borrowing money and you didn't have a clear thing where you are going to put the money. Again, some of us borrow money to pay back other loans. We get loans here. Because you have overborrowed, you go and clear another one. After that, creditor becomes very harsh. You rush the other side, you borrow there, you pay this. You keep on rotating. So what is the end goal? You find going round the rat race. Okay. So how do you manage debt? Plan before you borrow and borrow for investment. Don't just borrow because you have just a small need which you can overcome. Just borrow for investment and not consumables, unless it is mandatory. When you feel now here, I have to borrow. The other thing, thou shalt not covet. Don't borrow for things you desire, but you need. Because you may be getting loans to go and just have something which you only use once and that's it. Then it stays in the wardrobe. For example, some clothes, some shoes, and that's it. You just did it once. Then avoid borrowing on consumption items like cars, holidays, and furniture. Can you survive without those things? Can I buy cheaper ones? Again. So those are some of the things. Again, avoid the savior mentality. That in the family you are the only one who can save others. And so sent me some money. Remember the black tax? That's where it comes in, whereby you are the savior of everything. Okay. And why do you find yourself there? Again, because the money is in your pocket. If that money was invested somewhere, you'll definitely not be able to give that money because already it's stuck somewhere. Okay. Then create a budget that suits you and stick to it. And also, are you an impulse shopper? Keep your credit card or the ATM card at home. You don't need to carry them along. You can utilize them once it is very necessary that now I have to go and get my credit card and now utilize it. Yeah? Not to go to entertainment joint, then all of a sudden you don't have money, credit card. Was that necessary? If you didn't have that credit card with you there, then you'd not have spent that money. Then also school fees, pay in monthly installments. You don't have to pay full school fees. You can pay part of it, 2 installments. The rest can be put somewhere to earn something before I pay the next installment. And that's where also negotiation comes in, where you are buying something, even if you are buying land. If you get somebody telling you, yeah, we can buy this land and pay it in 3 months or 4 months, can you negotiate 6 months? Then you pay it slowly, yet you are not paying any interest. It's easier for you because you're only paying an installment. There is no interest free. It's like you have been given credit free, interest free. All right. So those are some of the things you need to do. Investment in different life stages. Now, how do you invest? We have seen those life stages. How do you invest? For example, at independent stage, how do you invest? Here, because anyway, the other stage that is independent, you don't invest, you don't have money, you don't have anything to do. So, but at independent stage, here you need to think long term because here you can take any risk. You have long way to go. And again, at that time, you almost have support system here and there. So here you can invest in shares, bonds, long-term things, Sacco savings, land and buildings, pension schemes before your family comes in. Where you're earning the money, put it aside. You lock it there. Then at growth stage, here you start also thinking of long-term investment, take high risk. Examples are like shares, bonds again, Sacco saving, land, and pension. So a bit. But at maturity stage, this is where you are around 50s. That is when you start liquidating your long-term assets. For example, land. And invest in less risky, because if you can invest in shares in the Nairobi Securities Exchange, and you may need that money very soon when you retire. Then at the time you want that money, the stock market is at the lowest. You can't sell. When you sell, you make a loss, or you get even almost nothing. Invest money market also in fixed deposits, and I know the Sacco offers the fixed deposits again, and they're able also to give you better return because they can negotiate with the banks. Again, at retirement, avoid any long-term investment. High risk or high risk investment. Here, this is where now you start thinking of, that's over 60, 70 years, think of money market a bit, where you can get the money easily, or fixed deposits will work again because you can liquidate the money very fast and you move on. Okay, so those are some of the areas you can utilize that. In short, what you are saying, when you are young, actually below 40, invest in long term. Above 50, around 50s, then start liquidating. People suffer when they have learned, and for example, God forbid you are sick and you cannot sell that land within a month and get the money, and maybe even go to India or get specialized treatment. Now that's where it becomes very important. So that is how you should differentiate at different life stages and how you should invest. The key thing, avoid investing in long term when you are retiring. For example, even investing in land and buildings when you are retired. That building will take very long. Unless you have a lot of money, you know, this is extra money you don't need. I want to invest for my children and so forth. There's some people say, then what will happen? You don't need that money. Then you can go there. All right. Therefore, the last part, the most important thing in life. Kama hujapata ingine, pata hii. The most important thing in one's life is cash flow. Remember this one. I always conclude with this, because the outflow is a mandatory, because you have to pay bills, living expenses, your needs, even at retirement. The inflow is where the problem is. How do I ensure I have the inflow, money coming in? That's where you start investing early. And I've just said the first springboard is your Sacco. Let me start there. Sacco allows you to put a little amount of money every month. Even the way you feel, you can boost. Sometimes you get a bonus here and there. Where do you take that money? Can I boost my savings? Unlock that money there. When you retire, you say, I have some money here. Now I can get this money and now retire honorably and live well. Because the key thing in life is to even your life, not to retire. Then you retire and you go to Ushagu, shacks, to rural home. Let me shock you. You'll go there, and sometimes you may find you are lonely, because even the neighbors there don't know you, because all your life you have been in Nairobi or you have been in outside the country. Then you are like, okay, and within 1 year or two, your money will be finished because they will be looking up to you. You'll be even be appointed the chairman of the cattle div, the chairman of this, the chairman of this, everything. Then you find yourself spending all the money within very short time. And you ask yourself, what happened? Where did the money go? And I hope if you look in your home village, you'll find people who have done that. Therefore, invest early so that when you retire, you are able to enjoy your retirement. And I usually ask this: have you ever seen a young person from Western world coming to Kenya as a tourist who is below 50? Most of them are aged, and when they retire is when they start now enjoying their life. So they don't waste their money chances there. They invest seriously, they work seriously, put their money in an investment. When they retire, and they can decide even to retire at 50 And then they decide, now I have enough money, I can now tour the world. I can get a yacht, I can get a cruise ship and move around the world for 6 months, enjoying my life because I've worked for that money and I've invested properly, saved properly. Thank you very much. That is all I had for you, just to prepare for you. And maybe the other thing I may comment is maybe I've seen questions on credit on. So here we are just focusing because I know that is more of administration. Maybe that the Sacco will handle that. Thank you very much. I now invite any questions. Thank you, Ruth.
Thank you, Eliud. Thank you for such an insightful session. Thank you. I'm sure it's now clear that, if you want to invest, you need to start saving first. And Sacco is the best place to start saving and to get that discipline of saving. So we'll go through most of the questions have been answered, but I'll go through some of them. And we'll ask or request Eliud to answer some of them. Some we will answer from our end. There's someone, anonymous attendee was asked that they need clarification of a plan on how they can save and get a loan, like a clear step by step. Is it doable? Yes, that it's doable. Please share your details. We'll be able to take you through. But in a nutshell, if you want to get a loan, you have to save. You have to be very consistent in terms of saving. So our minimum savings on a monthly basis is 3,000. And for you to get a loan, you have to attain the minimum share capital, which is 40,000. So if you do that, definitely you'll be able to get a loan. I'll go through some of the questions. Irene, share your details and we will get in touch with you on the corner limits. That has been handled. Rose, you're asking about how long does it take for your account to become dormant? It takes 180 days, that is 6 months of inactivity. If you've not been able to save, your account will become dormant and you'll be required to fill in a form. Share it with us on info at cornersacco.com. Jacob, will you share the presentation to members? Yes, we will do that. I'll go through the questions that have not been tackled. A question from Phoebe Wambugu. What criteria do SACCOs commonly use when assessing loan eligibility for members? And also, is there a recommended or minimum salary threshold required for an individual to qualify for a loan? We look at consistency. You have to be saving on a monthly basis. Again, your account has to be active. We look at your income. Different income flows will get you different loan limits, and you also have to attain the minimum requirements of the share capital that I've mentioned. For Corner Sacco, it's 40,000. So consistency is key, saving on a monthly basis, being very consistent. And if you set a limit when you're opening your account, for example, you said that you want to be saving 3,000 or 5,000 and you get more income, please feel free to increase that amount. It will also help you secure a good amount when you're applying for a loan. What is the interest rate of digital? That has been tackled there. Our Rununu Mobile is 5%, Corner Loan is 3% for the first 2 months, and then the third month is 5%. Jacob is saying thank you, Eliud, and thank you, Corner Sacco. Thank you, Eliud, for joining. Most of the questions have been answered. I'm just going through to see whether there's any question that has not been answered. Most questions have been answered, or there are more questions coming in. There's a question, Eliud. Shares or savings, where should one put more? Where should I put more? That is from Greg. Eliud.
Thank you. Shares or savings? Now,
Someone
savings.
is wondering, shares or savings?
Yes. So I get. So there is a savings. Savings is I hope the person is asking about the savings in the Sacco. That is the back office savings. And shares, I think the person is asking about the share capital. Now, those two are important. And maybe I want to differentiate between the two. One, and thank you for that question. Share capital, remember, is not refundable as a member. And being non-refundable, now when you put money there, you can only expect to get a what? A dividend if the Sacco declares a dividend. But on the savings again, you can get that money when you leave the Sacco. And again, it also earns interest on member deposits if the Sacco makes some surplus on it when it does some business. Now, some people ask, why is the share capital not refundable? I want to give you a good scenario why it is not refundable. Because I know that comes a lot. I put my maybe 20,000, 50,000 there, and it's not refundable. Remember, that share capital, when you go to the Sacco, you'll find some computers, you'll find tables, you'll find partitions. That is the money used to do that. We don't use your savings because your savings or deposits, you are likely to get it when you leave the Sacco, or you can withdraw. So, but this other one, if we refund you the share capital, what happens? It's like we have sold an asset of the Sacco. We have sold a chair, or we have sold a software or a computer, so that we give you your money back. So that is the reason it is not used for borrowing. It is not used for getting a loan on it, or guaranteeing somebody, or even for qualifying any amount of, or even a security for any loan. So that should be very clear. But where do you put more? For me, I put you on the saving. That will be better for you. But again, also regulations have also come out and said, instead of putting, the Saccos are also being regulated not to put money on, members to put a lot of money on share capital, but the Sacco to retain. Once they make some money, at the end of the year, not to pay everything, but retain some in the Sacco, so that the Sacco liquidity increases, even the amount of loans you can qualify increases. That's how the law and the regulations regulates that area. Thank you very much.
Well, thank you, Eliud. There is another question. Share how long after joining and actively saving am I qualified to apply for a loan? We have different types of facilities or loans. For short-term loans, you'll be able to qualify after 3 months. For long-term loan, you save and qualify to get those such facilities after 6 months. So short-term, 3 months, long-term, 6 months. So within 3 months, you'll be able to start applying for loans. There is another question about the unique advantages that Corner has. When we were starting the webinar, I mentioned that Corner Sacco is a digital Sacco. You actually don't need to visit our branches when you're being onboarded. You can fill in, you go to our website, you fill a form, you'll be onboarded, you'll be guided through on how you're supposed to save, and you'll be able to apply for short-term loans after 3 months. and long-term loans after 6 months. And our rates are very affordable, affordable credit. That is where we come in at Corner Sacco, and that is the idea of saving with a Sacco, so that you can be able to access affordable credit for your personal needs, your investments, and all that. So Phoebe, Corner Sacco is the place to be if you would like to join a Sacco. Dorcas is saying that her expectations have been met. That is good. Thank you. I'll go through the ones that we've not been able to answer. For members who are in diaspora, if you're applying for a loan, you can apply for a loan from wherever you are. We have internet banking. You'll be able to submit your application through that. You don't need to come. And different types of facilities have different take different number of days, or the SLA or service level agreement is different. There are those ones where you can get your money the same day, 3 days. Long-term loans like mortgages will take up to 60 months because of security perfection. So from diaspora, you'll be able to apply for a loan and get it. Is it possible to restructure some of the loans? Yes, it's possible. Please reach out to us. Our email is info@cornersacco.com. Reach out, we'll be able to assist you and even consolidate your loans. There is another question that has been addressed to Eliud. Can Eliud please explain a little about money market, if possible, or if not, can we get his email? Eliud.
Thank you. Money market is just one of the ways of investing. And nowadays, there is a lot of hype on money market in Kenya. And where there is hype, you have to be careful. And nowadays, it used to be there, and now almost there are so many companies offering money market, money market, money market. But for how long? I want to give you, for me, I look at it like the quill business. If you remember the quill business some time back in Kenya, everybody went to it. And what happened all of a sudden? Nobody wants it. For instance, now the returns on money market has gone down significantly, a lot. So you have to be very careful there as you go. It's just one way of investing. However, again, the money is easily accessible because you can put there, you get it when you need it. Actually, within a day, you can get your money in any money market. It will not have assisted you. Remember what you have said, you need to put money where you can't get it in short term. And again, only in long-term investment guarantee you better return than a short-term one, because short-term it's just short-term. The returns are very minimal. So there are many companies now offering that money market, but for me, sitasema hiyo. I can only go back to my Sacco. I know why. So it's very important. So you may find even a return in your Sacco currently is better than even in a money market. Thanks.
Thank you. There is another one related, actually, there's another related question. What is the advantage of Sacco as compared to bonds and treasury bills?
Good. Now, bonds, these are long term. And again, bonds are very tricky area. If you are buying a bond, please buy it at primary market. Primary market, it's when it is being issued. For example, the government, is it in 2024, they issued a bond for 18% infrastructure bond, tax-free. You get something like that. But it was one-off. if you go to buy it today, if you don't know how to do the maths to compute the price you are buying in the secondary market, you are likely to lose money. Remember, there is no open market for money market, for not money market, but for bonds. You'll not find it the way you go to the Nairobi Securities Exchange and you see the shares listed and their current prices. Therefore, here for a bond, you'll have to look for a broker who will now go and look for that bond which you want to buy and then sell to you. Therefore, it is not a very open market. Therefore, you are likely to lose. Treasury bills are also good, but short term again, because it is either not more than, it is either up to 365 days. It is 91 days, 182 days, and 365 days. That's it. You can, but in terms of, you have to again to keep on monitoring every now and then for the, especially on money market. I've also seen something on fixed deposit. The same with fixed deposit, you'll have to keep on checking again. When it matures, I need to renew it, and maybe the time you are renewing, the interest rates have changed. Like now, most banks are offering very minimal rate of 6%. Majority, actually, I think that is almost the average most banks are offering. Therefore, you have to keep on monitoring the market. But if you put your money again, you go back to your Sacco, you can be able to get such returns also from your Sacco, because I know your Sacco has also brought the investment products again. Thanks.
Thank you, Eliud. That is very clear. Last question. Which makes more economic sense, to accelerate loan repayment or to boost savings while still having a loan? Eliud, which one makes more sense? Paying your loan or saving?
Savings come first, because for the loan, it's still scheduled, it's still running, and you are still able to pay normally. This is extra money you has come. So if you pay the loan, where do you take the other part, which you have, then you have to invest it. Therefore, sometimes it can be both, or savings always. Remember what, when we were going through, the first thing, even when you get any money, you make some money, the first is to do what? Save. What part do you set aside for saving? Don't rush just to utilize the money or offset a loan and then. However, if you have gotten, that comes when you go to the life stages again, when you are towards maturity, you are able to retiring and you have a mortgage, please, you can run and try to offset the loan as fast as possible so that you don't retire with a loan facility. You make sure you accelerate the repayment, for example, if you have more cash. That's where that comes in. Therefore, but always saving first. Let's think the rest baadaye. Thank you.
Thank you. Thank you for that. That brings us to the end of the Q&A session. We now go through the quiz. As I mentioned that we have a quiz and we have some gifts to the top 3 winners. So we only have 4 questions. Please don't leave the session, don't drop. We've shared a QR code. Please scan or go to www.menti.com. Use that code to log in. We finish with the quiz very fast. It will take us just 2 minutes. Menti.com or scan the QR code displayed. We have some gifts to the top 3 members. Scan the QR code or use the code that is displayed there, 62171361. We're about to start. We are about to start. Please scan the QR code or use that code go to www.menti.com, use the code displayed on the screen, 62171361. Okay, we are now starting. 4 questions, as I mentioned. It will be very quick. Is putting money in a Sacco a savings or an investment? Thank you. Next question. The faster you answer, the more points you earn. Which of the following is not a rule for financial success? Never underestimate the value of small savings. Second one, always think twice before buying. Make tracking your expenses a habit. No need of budgeting. Oh, great. That's a good one. Next question. As I mentioned, the faster you answer, the better for you. Which of the following is not a bad debt? Lifestyle consumption, gambling, education, buying depreciating assets without an income return. Great. Thank you. Thank you so much. Congratulations to our top 3 winners. You'll get in touch with us or we'll contact you. We'll use info@cornersacco.com and we will make sure that you get the prizes that we've promised. Thank you so much. Thank you for participating. Thank you. At this point, allow me to thank our speaker for the day, Mr. Eliud Nzola. Thank you so much for this session. I can see from the chat section, members are happy. They've said that was a very good session. Thank you so much, and we've been able to answer all the questions. On behalf of Corner Sacco, thank you so much. Thank you, members, for joining this session. We'll continue educating you, taking you through our products on a monthly basis. After this session, we will share a survey, a post-webinar survey. Please feel free to give us feedback. Share the areas you'd like us to tackle in the coming months and the areas you'd like us to improve. Those surveys are very important. They help us serve you better. Thank you so much. Thank you, Eliud. Thank you, our members. And to our non-members, please join Corner Sacco, visit our website, contact us through info@cornersacco.com or call us via 0111 We also have a WhatsApp number. You can chat us on WhatsApp, our social media pages. Our WhatsApp number is 0111 222 social media, Corner Sacco. Thank you so much. Have yourself a good evening. Thank you.
United with faith, united with power. Kona nidi zito, kona ni nafuu, kona ni jumuiya. Bani kwanza. Bani kwanza.
Join Corner Sacco on joinus.cornersacco.net.
United with faith, united with power. Kona nidi zito, kona ni nafuu, kona ni jumuiya. Kwanza. Bani kwanza.
Join Corner Sacco on joinus.cornersacco.net.
United with faith, united with power. Kona nidi zito, kona ni nafuu, kona ni jumuiya. Bani kwanza. Bani kwanza.
Join Corner Sacco on joinus.cornersacco.net.
United with faith, united with power. Kona nidi zito, kona ni nafuu, kona ni jumuiya. Bani kwanza. Bani kwanza.
Join Corner Sacco on joinus.cornersacco.net.
United with faith, united with power.